Okay, great. All right, Mr. Linus, go ahead.
All right, thank you, sir. Okay, from the question, the example that said job costing, the following information relates to job activities in the month of June. And then the information we're all given, ranging from the job and the job code. And then it's about three different kind of jobs. And we have the material X, material Y, label, grade label A, and then grade label B, also the cost. But how I get to understand that in trying to deal with the problem or issues of job costing, it's about you trying to, you're going to arrange, bring out, like you said, we bring out the material, the direct material, the direct labor, and then the variable overhead, and then we now look at the fixed overhead and production overhead cost or something. So, but the area I have issues are because I don't want to just go read the entire
Go
question.
ahead, just go straight to it. Just go straight
Good,
to it.
thank you, sir. Because of time, it was where they were talking about the fixed production overhead. The fixed production overhead from the question said that the fixed production overhead is absorbed using direct labor hour. Very well, we know how to deal with that. And they said it is given at budgeted fixed production overhead of 160,000 naira. And then the budgeted labor hour is 500 hours. And the actual fixed production overhead expenditure in the period is 160. But when they were now treating the problem, if you now go to page 163,
Okay. What did they
okay,
now use?
good, thank you, sir. They now use cost per hour for about 320 naira, and that side threw me off. How do they
Okay.
arrive? Thank you, sir. Thank you very much. You've
All
gotten the
right.
question.
So they used cost per hour of how much? Of about
Yes, they
300.
use, yes, 320 naira cost per hour to deal with the issue of fixed overhead.
Okay.
So, and I cannot see that in the question. It was not given in the question. So, how did they arrive at that? Is it a typographical error or something? So, that's my question, sir. Thank you.
You will come for which of the material? Is it grade A or grade B? Which of the materials did they use 320 per hour for? Is it grade A or grade B? Or the total job cost per hour is 320 naira per hour. You've gone offline.
Okay. All right. Sorry. Yes. Yeah. For the two labor hour, the grade A and grade B, when we want to find the fixed overhead, we have to
Mhm.
we have to take the sum of, because the question said that fixed production overhead is absorbed using direct labor hours. So we take the sum of all the labor hours. We have labor hour for a grade A, labor hour for grade B, which is 60 and 25. That gives us
Okay, so the
85.
320 hours that you are seeing there,
Is the
are you getting
problem.
me? Now
Yes, sir.
it's not a problem.
Thank you,
Now
sir.
what they say, if you look at the question very well, I hope you are all following me. I hope all of you are following me. This is a sign that you are reading at home when we are solving class questions like this. If you look at the question very well, they say fixed production overhead is absorbed using direct labor hours, and you are given the
Yes.
budgeted fixed production overhead, right,
Yes.
at
Yes.
160,000. That's the
Yes.
budgeted hours. And then you are giving you the budgeted labor hours for 500 hours.
Yes.
Are you getting me? Now,
Yes.
they did not give you the actual hours that was worked. Okay, they gave you the actual hours that was worked for both grade A and grade B. Do you
Yes, they
understand?
gave. They gave,
Yeah, so
yes.
but because we are using the absorption rate that we're using for production overhead is the direct labor hours, they are using the budgeted one here. Do you understand? They're using the budgeted rate. So if you want to get the 320, you have to divide 160,000 by 500.
160,000.
That
Okay.
is the budgeted fixed production overhead divided by the budgeted labor hours. You get your 320.
Now, wow. Thank you very much, sir. The point my
Exactly.
calculator.
Exactly.
Yes, just on the push calculator.
Yeah, who has points for us? Can somebody confirm their points for us so that we can quickly do today's work? We want to
It's
treat
320. 160,000 divided by 500 is 320, sir.
Jesus
good.
Christ. Thank you very much, sir.
So you're welcome. Is that clear? Can we move on?
Very clear. Yes.
All right. So today we are looking at batch costing. And I want to also beseech all of you, please, whenever we finish a session in the class like this, go back home and practice them. That is how you can solidify what you know. Practice them, practice more questions. As much as you are solidifying what you already learned, it will boost your confidence to attempt questions relating to the topic that you have learned. So please confirm you can see my screen. Confirm that you can see my screen. If you can see my screen, then please unmute and confirm you can see my screen.
Yes, I can see your
Can
screen.
see
Yes,
us.
sir.
All
Yes,
right.
you can see your screen, sir.
Thank you. So today we are looking at batch costing, right? And as the name implies, we are looking at a costing system where goods are produced in batch by batch. Now, examples of goods that are produced in batch by batch are, for example, you want to produce egg roll. Are you getting me? When you produce egg roll and you already design the specification, you already design the shape of each of these batches, and you produce it batch by batch. If your mic is unmuted, please mute your mic. It doesn't make sense that your mic is I would have to remove you from the call if you cannot mute your mic. I will have to remove you from the call. Thank you. So we, as the name implies, is a system of costing where items are produced in batch by batch rather than individually. Now, when we teach job costing, we are looking at each job. We're looking at the cost of a particular job. The cost of a particular job is what we are focusing on. How much of material will be required to produce that job, how much of labor is required for that job, how much of overhead will be required for the particular job. Yeah, so how much of material will be required from that particular job, how much of production overhead, how much of, even in the production overhead, how much is fixed, how much is variable. I'm getting it. That is required in the job. And in job costing, we first calculated the prime cost. And then we added the overhead to it, and we arrived at the total cost of the job. But in batch costing, we are also going to follow the same method. But the difference between job and batch costing is in the method of production. The method of production. Their calculation is similar, but by the time you are getting to the end of the calculation for batch costing, you are now going to be required to calculate the cost per unit. Because in the batch that is being produced, it is not just one unit. In job costing, you can do the whole of all your A to Z activities for just one particular unit. Do you understand? For just one particular unit. But in batch costing, it is more than one unit. It can be done for maybe 100 units or 200 units or as much as possible. So at the end of it, towards the end of your calculation, you are now going to find a way to arrive at the cost per unit that is produced in that batch. Do we understand? Now, there are certain situations that make a organization determine to use the batch production method of costing. Number one is if they have received orders that is beyond what they can, what they want to sell. For example, when they make products beyond what they can sell, you received orders for 500 units, but you have the capacity to produce 1,000 units. Are we following? You have the capacity to produce more. So instead of producing one, the organization decides to minimize the cost per unit of the production. Because when it comes to manufacturing or production, one of the ways you can, the key aim of the owner of the business is to reduce cost. Because in reducing cost, That is when they can get more profit. And how to reduce that cost is to produce at a very, very large scale. Let me take that again. The primary aim of a business is to make profit. Is that correct?
Yes.
Are you
Yes.
with me? Good. It's to make profit. To make profit,
Yeah, very correct.
to make profit, you have to reduce cost. And to reduce cost, you have to produce at scale. You have to produce in large quantity. So by the time you are producing in large quantity, for example, company A is producing 500, the same machinery, the same capacity, they are producing 500 units. But company B is producing 500,000 units. Who do you think will be having the lowest cost? They won't have produced 500,000 units because they are using their capacity. It can be assumed that they're using their machinery, their facility at full capacity. Do you understand? So, and that is why if you are producing at a very, very large scale, there is tendency for you to be producing at a very, very low cost. And when you are producing at a very, very low cost, you have the advantage to now negotiate price, to now determine the price you would sell. You can even have the advantage to sell at a very competitive price in the market. At that time, when you're producing at a very, very low cost, you have the opportunity to outdo your competitors in the market using the pricing rule. Do you understand what I'm saying? And that is why in Nigeria, for example, those that are producing shoes in Nigeria, they can produce at a very expensive cost. If you compare the Nigerian made shoes, it will be expensive compared to China made. The ones that are made in China, when they imported them as, when you bring them from China en mass, it will be cheaper. The reason why China goods can be expensive than Nigerian goods now, especially for shoes, is because perhaps the clearing cost, the freight, the excise duties are attached to it, and any other kind of cost that is attached to when bringing it into the country. But the reason why their cost can be simple is because they are producing en mass, in large quantity. Are we getting what I'm saying? Are you following? Linus? Thank
Yes,
you.
sir.
Yeah,
Yes, sir.
the
Yes, sir.
same thing happens to right. So now back to batch costing. When a factory can make products that to exceed what their sales demand is, then they can decide to use batch production. It's also called production runs. Then another reason is if they make different products using the same machine. The same machine, you can use different products for it. So you dedicate one time today, you are using the same machine for different products. So you make product A today, you make it en masse in a batch. You make product B tomorrow. So by the time you are calculating for product A, you know that before you get to it, you have done product B, product C. Are we getting so each of the products that you are making, you are now going to be doing them in batches. Those are another reason why an organization can use batch costing. Then in some industries, it is impractical to manufacture items one by one, except you make several units at a time. Unless you make several units at a time, you cannot do one of them. You cannot produce just one. For example, is printing of flyers. If you are familiar with the printing business, you will realize that it is not profitable for a printer to go and print just one pieces. They just print 10 pieces. What they do is to produce on 1,000. They produce in much. So by the time they produce en mass, it reduces their cost per unit, and then it is more profitable for them by doing so. Do we get it now? These are the three reasons why an organization can decide to use batch costing method as a way of costing the goods they manufacture. Nancy, do you understand?
Yes, sir.
Israel, do you understand?
Yes, sir.
Who did not understand? Akinlulu, do you understand? Bakari Yusuf, are you with us?
Yes, sir. I'm with you, sir. I'm with you, sir.
And you understand what we are doing?
Yes, sir. I understand.
Okay. Okay. Now, if you understand what we are doing, I want us to solve a particular question, and then we call it an evening. So by the time we are meeting next, we would have gone through the calculation. You would have looked for the other ones that we can do, that you can use to practice, And then by next class, we'll be meeting for process costing. Is that clear? All right, so look at, let me know if you can see my screen. Yes. Can you see my screen? Can you see my screen?
No, sir.
Yes, sir, I can see.
Yes, I can see your screen.
All right, so let us read the information there. It says the following relates to the production of the batch of 1,000 units in October. We are producing batch XYZ. That is the batch of item we're producing. The price of the contract we have received to produce this item is 400,000 naira, and we need 2 materials to produce it, and we need 2 grades of labor to produce this particular material. Are you with me? Now, the contract price for the particular batch is 400,000. The cost of material 1 is we need 250 kilogram of material 1 at 300 naira per kilogram. We need material 2, 350 kilogram at 400 naira per kilogram. Are you following? We need labor, 2 grades of labor. Yes, thank you, Fatima. We need 2 grades of labor. 100 hours for grade A will require 150 hours for grade B. Now, the variable overhead recovery rate is how much? The variable overhead recovery rate is how much? Please unmute and speak.
200 naira.
200 naira. 200.
200 per hour.
200 per hour. And the fixed overhead rate is how much?
250 per
200
hour.
per hour.
250 per hour.
All right. So the question now says production overhead is absorbed using direct labor hours. Direct labor hours. How do you now solve this? If you have to solve this question, okay. Can you still see my screen? Is it still visible to you?
Yes, it is.
Hope it is
sir.
not too small.
Nope.
Okay, good.
It is small.
It is
You
small.
can zoom it.
Okay, let me see how we can go.
Zoom it from your end now if it's small.
Is it better now?
Yes,
It's
sir.
okay
Yes,
from
it
your
is.
side.
You can zoom it from our end.
Okay, that's
We
good.
can zoom it from here, so it's okay.
Thank you. Now, the first thing we'll do here is we have to find the table. We have to table this line will contain for materials. Put all the materials here, right? This is the cost per unit here. Then the kilograms, and the amount. Are we getting it? Now, material here. Material 1. What is the cost per unit of material 1?
250 per
300 per kilo.
300.
300.
300.
How many kilograms do we need?
250 kilograms.
250.
250 kilograms. Material 2.
400.
400 per kilogram.
400 per kilogram. How many kilograms do we need?
350.
350.
350.
350. Material. Okay, then we go for labor. Labor grade A. What is the cost of labor grade A?
275.
275.
Per hour.
Just 1 moment. Let me stop people from joining directly so that every other person will go to the YouTube link. Yes. All right. All right, so labor grade B. Labor grade B. What is the quantity of labor grade A that we did?
375.
375 naira per hour.
375 per hour.
375 per hour. How many quantity? How many hours?
50
For
hours.
B is 50.
50 hours.
That is for grade B.
What is for A?
100
A
hours.
is
100.
75.
Naira per hour.
What is the
For
cost
100
per hour? What is the cost per hour for grade
275.
275.
275.
A? Okay. What about for grade B?
375.
375.
Of the 5. What else do we need? Now we have variable.
Variable by
Variable overhead.
How much per hour?
200 naira per
200.
hour.
How many hours are there?
150 hours.
How many hours?
150 hours.
How do you arrive at 150 hours?
Thank you.
Summing the labor hours for grade A and grade B.
Good, because we are using the same hours for that's the summation of grade A and B. Now you are using production overhead is using direct labor hours. So we combine the 2 hours of the two materials and we use. Unlike the question that Linus asked us earlier, that where we have budgeted hours and the budgeted cost per hour. Do we get it? It's a different thing entirely. But here we don't have budgeted, we don't have actual. This is the information we have and we're working with it. Do you understand?
Yes, sir.
Yes, sir.
Good. So we have fixed overhead at how much per hour?
250.
250 per hour.
250. So both variable overhead and fixed overhead will be running at 150 per hour. Now let us multiply them. Is it good? This
75,000.
75,000.
Yes.
Do you understand?
Yes, sir.
Yes, sir.
Good. So that is the where we are. Oh, let me put this at fixed overhead. Now, total cost we have absorbed. Total cost absorbed. Absorbed is how much? We had
328,750.
328,750. And good night now. So and we already discovered here that we are producing 1,000 units, right?
Yes.
Total units. And when we started, I told us that we will add. We at the end of the when we find out the total cost for batch, we will now divide it by the total units that has been produced to arrive at our cost per unit. Do we understand? Do we remember?
Yes.
Yes, yes.
The total units is how many? 1,000. Now cost per unit is how much? This
328.75 naira.
328.75.
328 naira, 75 kobo.
Yes. It's cost of goods.
I didn't get that. How do you get
Produced.
What do you say? Any question? Who is asking a question? Who is asking a question?
Sir, please, how do you get the total units? The 1,000.
The what?
The 1,000 total units.
1,000 is in the question. Look at the first line in the question. It says the following information relates to the production of a batch of 1,000 units.
Okay.
Do you understand now?
Yes, sir. Thank you, sir.
Is it clear?
Sorry, sir. And I missed that variable overhead kg. How do we get the 150?
Yes, they said fixed production overhead is absorbed using direct labor hours. Now, the hours that was used for fixed production overhead is the combination of both grade A and grade B hours. It's another way. We can also do it this way. Like the fixed overhead, fixed production overhead. We can say fixed overhead for grade A, fixed overhead for grade A. Are you getting me? We can also come back and say fixed overhead for grade B. So instead of putting 150 here, what is the hours for grade A? What is the hours for grade A?
100
hours.
100 hours.
hours. We bring the same thing down. The hours for grade B is how much?
50.
50. So if you are now adding the two together, if you are adding the two together, 250 and 150, what does it give us back? Our question, 150. So that is why we combined the labor hours. We can as well split them the same way we have done here. Now, for the variable overhead that you asked, there is no absorption rate. Our absorption, yes, hours given for the variable overhead. So we assumed that what is applicable to the fixed can be applicable to the variable. Do you understand? The only difference will be in the prices of each of them. Are you getting what I'm saying?
Yes.
Yes, sir.
Hello, because in producing this material, whether fixed or variable, they are going to spend the same number of hours in producing the same material. So they've produced the material with 250 hours. The variable part of it, the variable part that is allocated to the overhead is 200 naira per hour, and fixed part is 250 per hour. That is for the production overhead. That does not reduce nor increase the number of hours spent on producing the batch of 1,000 units. Do you get what I'm saying? The only thing it has done to us is it has further split the production overhead cost into either fixed and variable using the rates that is given in the question. Is that clear?
Yes, sir.
Yes, very well, sir.
Yeah. So now from there, we have the cost of goods produced and the total units of the item produced and the cost per unit. And that is how you calculate your batch cost. This particular topic doesn't really most times come out in your exams. What it does is occasionally ICANN can just decide to test a particular question like this and put it in the objective, and they say 5 marks. And they just decide to extract 3 questions from it. They ask you, given this scenario, use this scenario to answer questions 21 to 22. Do you understand? And they say cost of goods produced is. They put different options there. If you don't know the calculation, you will not be able to pick the correct answer for the cost of goods produced. The same thing applies to cost per unit. They will ask you, the cost per unit is what? They put it inside an option. Another way they can also bring up questions like this is to say, okay, they put it as part of, they put it as question B to support another question. They put job costing as question 1. They put batch costing as question 1B. Do you understand?
Yes, sir.
So that is why it is important that you understand the subject being considered. The subject being considered. Now, is there any question from what we have done? Is there any question from what we have done?
Sir, please, I have a question.
Yeah.
Please, how do we, or why do we use the 150 for the variable cost overhead as the cost per unit?
We didn't use 150 as cost per unit for the variable cost overhead. We use cost per unit is 200. This is cost per unit here.
Okay.
Yes, cost per unit is 200 based on what we have in the question. Then the quantity, the kilogram is 150. Sorry, the number of hours is 150.
Okay. Oh, I mean, I see it. They are all under labor. Why do we use labor?
Because the
hours?
question says we should use labor hours. Look at the last line in the question. It says fixed production overhead is absorbed using direct labor hours.
Okay. I understand. Thank you, sir.
You're welcome. So fixed production overhead is absorbed using labor hours. All right. Is there any question from anybody? Is there any question from anybody? Okay. What's your question? All right, already word. Taiwo. Already Taiwo. Oh, you are just raising your hand that you are not confirmed. Oh, you send the text. Okay. Okay. Fatima says, if we are to interpret the solution in a sentence, how do we put it into words? You put it into words by saying, on the scenario above, it is observed that the total cost of goods produced is 328,750 naira, and the cost per unit is 328 naira 75 kobo. As simple as that. Then you will now, if you now want to support with further explanations, they will now come after that first line. The first line will capture your direct answer, which is what the examiner wants. What is the cost per unit? You've told them the cost of goods produced and the cost per unit. You can now go further by explaining in other lines. You say the prime cost is, you give them the prime cost. Now, what is the prime cost? You bring your materials, you bring your labor, and if there is any direct expenses there, you put it into it. And then you now factor in your production overhead later on, after you've gotten your prime cost, to get your goods, cost of goods manufactured and produced. Fine. You now twist it based on the way you know how to do it. But if you start with that particular line, the cost of goods produced from the scenario above is XYZ amount, and the cost per unit is XYZ amount. This is now, you now continue from that part. Is that clear, Fatima? Good. Taiwo, where's your text? I'm not seeing your text. Okay, it says it was previously taught. You previously thought that if the question did not give an instruction to use labor absorption, use labor hour, absorption should basically be calculated based on labor hour. I believe that I'm not getting your question. You said you previously thought that if the question did not give an instruction to use labor hour, absorption should be calculated on labor hour. I believe. Okay, so the question will give you, will point you to the direction of what you do. The question will not just leave you blank. But for example, in this particular, the first one we did under job costing, it gave us, the question gave us projected labor hours. It even went ahead and gave us projected labor cost for the actual labor cost. Sorry. But the question, in the body of the question, we have the actual labor hours. In the additional information to the question, we have both projected labor hours and projected labor cost. We also have actual labor cost. And we already have the actual labor hours in the question. So if you are calculating your cost, the actual cost, then you be able to factor in as applicable where you're supposed to apply them, you projected and the actual. Do you understand? Now, back to this question that we are solving. If we are now going to move this forward into a ledger, all this particular material 1, material 2, labor grade 1, labor grade 2, variable overhead and fixed overhead cost will come on the debit side of your P&L. They will be debited to your profit and loss account. Then your profit and loss account will now will credit it with cost of goods manufactured. It is that's on your expenses. You now take this cost of goods manufactured into your income statement to reduce your revenue. So you will now take, then you are preparing your the overall P&L. Apart from the expenses. The first one I said, where I said just debited, is you are debiting these materials to their costs, to the cost. You are debiting the cost You're debiting stores, you're debiting wherever you're taking them from. Do you understand? Wherever you're taking, so you will now take this as your cost of goods produced, which will be used to reduce your revenue and arrive at your gross profit when you're calculating your overall income statement. Is that, and if you're doing your journal entry into this, if you're doing journal entry for this particular operation, the ones you are debiting, the account you are debiting is what? And which account are you crediting? If you are doing journal entry for this, which account are you debiting and which account are you crediting?
So debiting
crediting inventory
expense account.
You're debiting what?
Expense account, since it's our expense is increasing.
You are debiting the journal for the account, the ledger account for this particular job, for this particular batch. Do you understand? By the time you received the batch order for 1,000 units, there will be an account created for it, for batch XYZ. All of all these materials that are used will be debited into that batch account. Are you following? All these materials will be debited. Materials will be debited into that batch account. Labor will be debited into that batch account. Are you following? But in the material inventory account itself, perhaps the account held in the stores or the account held by the material manager, that particular account will be credited, but the batch account will be debited. That is the account opened for this particular batch, for this particular production run. It will be debited because that is the account that is receiving the material. Where the material is coming from will be credited. Where the material is going will be debited. Don't cry. And is that clear?
Yes, sir.
Yeah, I'm with you, sir.
Okay. So if you understand that, I think we've done something meaningful enough today to call it an evening. Is there any question from anyone again? Is there any further question? Is there any further question?
Hello, sir.
Yes, I'm with you. Go ahead.
Okay, thank you, sir. I want to ask if I am right, if I have this particular thinking right inside me, because in trying to deal with the issue of that journal entry, what I practically did, or what I perceived, was to use the accounting concept that said whenever expenditure increases, we debit, right? So we debit. I think that's the concept I used in trying to. Okay.
When expenditure increases, why did it increase? Where is it going to? The incremental cost is going to where? It's coming from where? If you have to follow the money.
Okay, that's the batch, that batch XYZ account.
Like I said earlier, you've created an account. You've created an account, particular production run. You've named it batch XYZ. Do you understand? Every item that is being consumed in the process of producing that batch, it is that batch that is receiving those items. Do you understand? Material would be in the store before, right? Let's say material is in the store before, it's in your inventory. If your this particular material 1 and 2 will keep your inventory and be consumed in the batch, in the production run. As it is leaving your inventory, you credit your inventory. Do you understand?
Okay.
The double entry principle says what? You credit the giver, debit the receiver. Is that not it? So as it is leaving your inventory, it is leaving your stores, you credit it from there. And then you are debiting the batch account itself, because that is the account that is consuming the material that is coming from the store. So batch account is receiving the material, store is giving the material, inventory is giving the material. So as batch account is being debited for receiving, the store, which is your inventory, will be credited for giving. That's on one part. Do you understand that? So the same thing applies to all of them. So the batch account itself, because it is the one consuming, will be debited. The total amount that you have debited to that cost, to that GL, is what you will now put on your credit side as your cost of goods sold. Okay, let's quickly demonstrate it for us so that you will see what I'm trying to say. Let me open a new GL. Batch. Let me open a new GL batch X, Y, Z. If you are following, what are the materials we have? These are the materials. Do you understand? Hello?
Yes, sir. I'm following.
Yeah, these are the cost of these materials, right? This is the debit side of. This is the debit side. Now, this is the credit side. I'm going to put it in a more final shape so you will understand better now. Yes. Can you still see my screen? I hope you can still see my screen.
Yes, we can see your screen.
Yes, sir.
Okay. Now, these materials are on the credit side and on the debit side. Now, on your debit side, because I said the store is credited, we'll be giving it out. The batch account will be debited. So you've debited the batch account with material 1, 75,000. You debited material 2 for 140,000. You debited material 3, you debited material 4, 5. Are you getting what I'm saying? Labor and overhead cost. Then on the credit side, you now credit the cost of goods sold. How much will you credit the cost of goods sold? 328, 750.
50.
Do you understand? So at the end of the day, you
Yes,
have
sir.
your sum.
The same amount.
The same amount. Do you understand now? Is it clear to you? So it is this one that is on this credit side that will now go and be debited to your P&L account. So let's say you have your P&L here. Let's say you have here your P&L account. P and L, which has both your debit side and your credit side. Is that correct?
Yes, sir.
On the debit side, there you have your cost of goods sold here. How much?
328, 750.
Do you understand now? Do you understand what we just did? Hello?
Yes, sir.
Do you understand? You are not responding.
Yes, sir. Yes, sir.
So this is how your P&L will look. Let me put so you can get this thing very clearly. Now this is your P&L. Then this is your batch account. Okay, let me just. Then here. Can you see it now? Can you see it differently now? This is your batch account. This is your P&L account. Is that clear to you?
Yes, very well, sir.
Yes, sir.
Good. This is where it is coming from. Don't forget here where you first start to prepare the the schedule for consumption. So you have prepared the schedule of consumption for batch. Now, by the time it comes to P&L accounts, this particular information that we have here, where we have the contract price to be 400,000. Are you getting what I'm saying? We will now
Yes, sir.
put it on the credit side, contract price,
Sales.
revenue. How much?
400,000. 400,000.
400,000. So your net profit will now be
Gross
will now be-
profits.
yeah, that's what will now be. It will now be this minus the cost. The profit will now be 71.5. So what will be your total?
400,000. 400,000.
400,000.
400,000. Is that clear?
Yes, sir.
Yeah.
No, please, how did you get the 400,000, sir?
Okay, so this is where the 400,000 is coming from. Contract price 400,000. Have you seen it now?
Yes.
Can you see it now? The lady who asked the
Yes.
question.
Yes, sir.
Okay. All right. So that is where we got the 400,000 from. Contract price is 400,000. This is the amount that is being consumed in calculating our cost, the cost of goods produced and all. This is the schedule for that. That is what we have done here to calculate our cost of goods produced and cost per unit. Then you now go to the particular GL account for that particular batch. If you are in a manufacturing setting, if you work in a manufacturing setting, to call something process order or internal order, this is exactly how it works. Do you understand? Those of you who are manufacturing account, management accountant in practice, we call this internal order or process order, where you create for the production run, you create a particular account for it, create a cost subject for it. Don't forget when we're doing our chapter 5, when we are looking at accounting for cost estimate, for cost elements. Is it chapter 5 or chapter 7? If you remember, when we did chapter 5 or chapter 7, we talked about cost objects.
Chapter 5.
Chapter 5, yeah, God bless you. We did chapter 5, we talked about cost objects. This is exactly how it works. So you create a particular cost object, which is in this case an internal order for this production run. Now, when you create it, all the materials that you are using will be debited into that particular account, because that is the account that is consuming the materials consumed. And then you are crediting your cost of goods sold. In your P&L will receive your cost of goods sold as a debit. That is what we have here. And then you measure it against your revenue to get your profit. Is that clear?
Yes.
Is
Yes,
that
sir.
clear, everybody?
Yes, sir.
Yes, sir. Yes, sir.
All right. That's a fantastic one. And I hope time you add this to up. Is it by mistake or if you want to still say something?
Okay. No, it's not by mistake, sir. I just wanted to.
No, I mean Taiwo.
Okay. Okay.
Okay. Yeah, Linus, go ahead.
Okay, sir. Looking at what you've just done now, I just wanted to ask from the question, but I don't see where we're asked to do all of this computation down to.
No. You
the
don't. You were not told to do it.
Okay.
I just had to go that mile so that you understand how these whole manufacturing processes, how the batch costing goes into FA, how the debit and credit links up together. Because if you are doing FA and you are doing, I'm trying to remember a topic in FA, then all these things can come into place. Maybe, I don't think it's vertically, but let's say your profit and loss account, right? You are doing your financial statement. These are examples of how expenses flows into your account. And so by the time we will see this, we've been able to link. Can you still hear me?
Yes, I'm hearing. Yeah.
Yeah. So this has shown you how you can link your manufacturing account into your financial accounting, and how it connects to the double entry principle, credit, debit, and credit.
Okay, thank you very much, sir.
You're welcome. Any other question? We need to call it a day. All right. So I think at this point, oh, just a moment, please. My network is. Yes. So thank you very much. Can you hear me now?
Yes, sir.
All
Yes,
right.
we can
So
hear you.
I think that is where we will draw the curtain for tonight. I am grateful for those of you who joined. And, thank you. We will meet again same time next week or within the week. I can see if we can look for one of those times so that we can catch up with and accelerate our journey.
Thank you so much,
Thank you
sir.
very much, sir.
You're welcome.
Thank you so much, sir.